following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 18th. Terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Now is just fine. 877-927-6648. You can call us internationally, 727-445-1044. You can send me an email, steve@tfnn.com. Inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on Merengue Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow traded up 17 points. She's trading out at 20,623. S&P up 4. 2361 is the number it's printing. NDX 100 up 0.5%. That's 28 points. The Russell 2000 up about 0.25%. Really 3 points. The semiconductors on fire again. Of course, they were really on fire to the downside yesterday. They're up 1.25%, 12 points, trading out at 10,42. One of these days, maybe it'll be at the 10,000 level, but not today. We've got the only indice that you and I really track to the downside is New York Stock Exchange off 5 points. We'll spend some time there. VIX index back 2.5%. No big shakes out there. Down 39 cents, trade out at 15.20. Gold's back $4. Silver's down 25 cents. That's about 1.5% to the downside. Leaders to the upside, dollar-wise, you've got Athena Health up about $22. Amazon is up 10. Insight up 9. That's 7%. Google's up $6. Regeneron Pharmaceuticals up 7.5. Remind me to go take a look at that. Let's go see how that responded in yesterday's market. Plus to find out or confirm whether it's above its consolidation pattern. To the downside, Mercado Libre, $13 to the downside. Copa Holdings up 9. Whirlpool is off $5. Of course, I want to look at what you want to look at. But let's start off with what it is that we know. Now, each of you out there knew that today was either going to be a bounce or a bottom. Am I right or am I right? Yes, of course you knew that. We know the playbook out here when you have that volatility index do what it did yesterday. What was it, up 47%, 36%, whatever the number was, anything north of 10%. We know that we've got an 85% chance of a bounce or bottom forming really within 48 hours, but lately it has been within 24 hours, and that is in fact what we see. And thanks to everybody that attended last night's workshop. And for all of you that are going to listen to the archive, you'll know how to reach out to me. But the cool thing about yesterday and doing a workshop from 5:30 to 6:30 was we finally had some live data at the end of the workshop. We were able to go back and say, okay, what are the markets doing? And very rarely do you teach folks about 5 essential patterns in the market. And all 5 of those were something that played out that day to provide us with information as to what to look for early in the morning. One of the patterns that we look for, one of the patterns that you and I look at for every bear market, and that pattern does not exist, by the way. So anything that we might get, and I'm open to some type of retracement, we're not going to see a 20% decline. We're not going to see 20% or more. We're not going to see bear market action out there. So for any of you wondering, is this it? No, this is not. Unless this time is different, and I don't believe that this time is different, however. So with regard to the markets moving lower, we already knew about the VIX index. You and going to spend a lot of time on that out here. But one of the other things that we knew was that if price is moving lower or higher, in this case here lower, doing a less relative energy out there, that is a sign of a bottoming pattern out here. And the larger the time frame, the better. When you're looking at 3 2-hour charts here, the ES at the top, the NQ in the center, and the Dow on the very bottom. And we can see that this morning, early in the morning, let me get my crosshairs out here. They give you the time frame when this ended at about 6 o'clock this morning. We could see that price is moving lower, doing less relative energy. Then at 8 a.m. out here, we saw a nice little bullish reversal signal. You saw a nice little piercing candle. Now, the real key in this case here, and take a look at these 2-hour charts, we are going to spend a little time on the 2-hour chart here, is it was very key for price to get above Stevie's red line. Something else we took a look at. Well, you can see right now that price is above Stevie's red line. We've seen a bit of a pullback, and what we're really watching is whether or not it's just a test and a rejection of that level. Because you see, the outcome of what a volatility index, so with the one-day rate of change, such as yesterday's, provides to us is knowing that the sky is not going to fall and that you're going to see just simply the following day the markets just continue to careen to the downside out there. The benefit of sharing that with you was for those of you that were not short and were thinking, man, this market's down 360. I'm going to go ahead and take a short position at the end of the day. Thank goodness you were listening to the show because you avoided making that terrible mistake. You wanted to at least sell some type of retracement, which has already occurred. We're going to go take a look at what that is out there. If the market is going to continue to head lower, let's say tomorrow, Monday, whenever, you'll see this red line on these 120-minute charts fail to act as support. They were resistance all day yesterday. You can see how they were tested, how they were rejected, and now we're trading above it. So we've got that bounce/bottom pattern that is in. How do we know if this is going to turn into something more than what we have seen thus far? Well, we have a couple of different vehicles that you and I can track. One of those, let's just take a look at just normal retracements out here. So let's go, and we're going to stay on the 120-minute time frame charts. I just have to figure out where in the Sam heck I put it. Where did I put it? Here we go, right here. So now you've got these. Now we've got 4. In this case here, I've added the Russell 2000, which, by the way, Russell 2000 was making the same pattern as that previous chart that I showed you. It's just when they're all horizontal, it gets so scrunched. Sometimes it's a reason why I only put 3 out there. Now let's take a look at the ES Mini. So let's start with the S&P 500 in essence. From high to low, the high I'm referring to is about 8 o'clock in the morning yesterday during that 2-hour session. 2404.50 is the number. All the way down to the low that formed earlier this morning at 2344. So a heck of a move from 2404 to 2344. If you go from high to low, those are the green lines that you see across my screen, 0.382, 0.618, 0.786. Those are the percentage of the retracement from high to low. So the first outcome, the dead cat bounce, formed. Actually, this is a Gartley buy pattern that you're looking at. I would have to scrunch it a bit more for you to see that. The Gartley pattern requires an A to B equals CD and needs to be confirmed with a bullish reversal signal. That's what we've seen thus far. Remember, every Gartley pattern has 5 outcomes. Outcome number 1 is that dead cat bounce, that 0.382 retracement. 2367.50 is the number. The actual high that we've seen so far is 2367.50. For goodness sakes, how does that work? A normal place for people to get off the elevator. We'll come back to these charts when we get back from this break. Steve Rhodes with TFNN.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Of course, I want to welcome two new tigresses to the TFNN network. Their ages, they're young. They're learning all about pattern recognition right now. That is Elizabeth and Emily. Ages 3 and 2, folks. 3 and 2. They are learning all about pattern recognition, and they want to know whether the ES Mini is going to move higher or not. So we know that we've seen a dead cat bounce. That's nothing more than the 0.382 retracement, outcome number one of any type of Gartley buy pattern. And what you're going to be watching between now and 2 o'clock when we go off the air here, inside the ES Mini, is a level of 2360.25. That happens to be the top of its 120-minute market profile. This structure that it's in right now is set up where the snipers, where the sellers, where the bears are sitting at that 2360.25 area, anywhere between there and 2358. So if, in fact, price is able to close above that level, that will let us know that the bulls were able to overrun those bears. And then price ought to move up. Doesn't mean by 415 or something. Just says that price ought to continue to move up and head to the 2381.50 level. Now, this should be of great assistance to you if you are short, whether you're short the some type of S&P derivative or whether you are playing the futures market. But this should be the area here, this 2360, that should be really significant resistance. And price really shouldn't budge above that for us today. There's nothing more than it. Now, inside of the end out here, you can see right now it's at the 0.382 retracement. It is sitting above its 120-minute profile, that being at 58.08 and a quarter. And the NQ, being the leader that it is, the leader of the pack, I'll do that. The leader of the pack, this is signaling to us, any close by 2 o'clock, about 56.08 and a quarter, that this is going to move to 56.59 and change out there. Likely, this will go ahead and lift all tides higher. Now, it is not unreasonable to think or believe that the NQ is going to make another run for its highs again, maybe even take out its highs. So we really want to go ahead, and not necessarily the other indices out here, but the NQs specifically, can they do it? Well, of course, they can do anything they want. At this stage here, it looks to me Like that is what the NQs want to do. The first thing that I want to see, though, is a close really above this 56.18, then get up to 56.59, and we'll take things one step at a time out there. With regard to the Dow, it still hasn't made the dead cat bounce. The Russell 2000 has not either. So both of those are the weak links. What does that mean? It means if you start to see a beeline to the door and the NQ and the ES really don't have any strength to move higher, that the Dow and the Russell are probably the places, not probably, they would be the places that you would like to have your shorts on, so to speak. So that is what's going on inside of the markets out here. Now, the question is, what is it that would cause prices to move higher inside these markets after a day like yesterday? And if prices do move lower, does that mean that it's over? I think those would be good questions here. If we take a look at the advanced decline oscillator readings, the summation index as well as on these charts out here. Oh, I know what I want to do first. Let me do this. I'm going to step back, although it is really chart number 4, panel number 4 on my screen, the very bottom of my screen here, the volatility index. Because this would probably be the next area where you should be focused on to try to help answer the question, put together that Rubik's Cube of the market. Hey, what's the market doing? So if we go take a look at, hey, what's the market doing? And isn't it nice to be able to use the volatility index to use as a guide with regard to patterns that are out there versus get sucked into those sayings and those lousy expressions out there? Hey, the market's complacent. You try to figure out how to trade that one. Instead, what you and I know is there are a series of patterns out here that do help us trade the markets. It's regardless of where the price is at. The question is, where is price at in relationship to whatever it is that we're going to be measuring? In this case here, you're looking at 2 of Stevie's blue lines. These happen to be Bollinger Bands. And the level that you really want to be watching out here is 1390. Now you're at 1537 right now. As long as price stays above this upper band, then that says, you know what, prices can certainly continue moving to the downside tomorrow, the next day, and so forth out here. And so you want to, and this is especially true for any of you that trade any of those derivatives, UVXY, so on and so forth out here. Why? Why is that 1390? Why is that upper Bollinger Band so important? The reason is this. Once price closes underneath the upper band, the pattern that then exists as price goes ahead and visits the low there. It's down to 1045. And that's the kind of pressure that you just simply don't want to go ahead and take heed over. How often does it work? Basically, all the time. Repeat after me. If you are long one of those vehicles and you see it close below 1390, now, if you're going to see it close below 1390, volatility, a spot volatility index moving down below that, what do you think is going to happen with the S&P 500? You think it's going to go lower? Or you think it's going sideways to higher? Yeah, exactly. It's the latter answer out there. So with regard to will the markets move higher? Will the NQ make it back to its highs out here? Well, one of the things that would go a long way to making that happen is going to be the spot volatility index. Now, it doesn't really matter with regard to where it closes today. There's a number, 1390. That number will change throughout the day. It'll certainly change tomorrow. But once price gets back inside that Bollinger Band, then what you're looking at is price inside the volatility index going back down towards its lows out there. And I don't want you to take that heat. I can't guarantee that that will happen out there. I just know that that is the pattern that unfolds, or at least goes back into the midpoint line. That's really the first target, is the 50% line. I had turned that off, but I'll give that number to you anyways so that you can pay attention to it as well. And that number would be 1218. And that would be not the 50-day moving average, but that is the 50% line inside of this Bollinger Band reading out here, which is not the standard Bollinger Band defaults that show up on your screen out there. So watch that 1390. Now, back to the advanced decline oscillator readings. Let's say that I'm just simply dead wrong, which really can't. We got the bounce, right, that we were forecasting for yesterday. I just can't be wrong about that. We already got that. Let's say that the market falls apart today, the rest of the afternoon. In fact, it falls apart as soon as our polar bear, David White, comes on at 2 o'clock. Or maybe it waits till 3 o'clock when Tom is on. I don't know. What we would then be watching is the New York Stock Exchange, which has already got a minus 109.48 reading. You get down to the minus 150 area. That's where the market actually also forms bottoms. How often? All the time. Did it do it during the 2007 to 2009 move in the markets to the downside? The answer is it did. Does it have to do it right at 150? No, it doesn't. Can it get below 150? Yes, it does. The lower that it goes, the more oversold, the larger the bounce, so to speak, out here. So a market that even finishes lower today would have some sentiment to say, okay, this brings back. It need to see a reading of minus 150. So we need quite a bit of a net declining issues to take us down there. It's below zero. We know that sellers are in control. We know that the market's doing the normal thing out here. Watch that 1390 on the spot VIX index. That is probably the next biggest clue other than those market profiles and those retracement levels that you and I looked at during that first segment. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Now 14 points. S&P is up 4. And let's take a look at some of the New York Stock Exchange information out there. As you know, just a few trading sessions ago, the New York Stock Exchange, the advanced decline line made a new all-time high. Bear markets don't start like that. They're usually put off for 1 to 2 months at a minimum. out there. But that does not mean that there are not problems inside the New York Stock Exchange. That doesn't mean that yesterday was really a confirmation of a market that wants to move lower into June out here. My interpretation that this, I'm open to the market, and it looks like there still is this possibility for the markets to move higher into next week. Originally, my call was going to be for Friday. Things may have been pushed back just a bit by about 4 or 5 days out here. But again, we got to take things one day at a time. Now, one of the big problems here, there's really two of them. Let me see if I can find them. Here is a chart of the New York Stock Exchange with two panels on it. The bottom panel is the advanced decline data. And we can see here, maybe you can see, it was back, it looks like on May 15th. So just a few trading sessions ago, when that advanced decline line made a new all-time high. Now, I also track the volume, and I do that as a summation of data, just as just to do the advanced decline data out here. So the number basically relevant. 578 or 143,930, because all those are just math computations based on a bunch of historical data so that I can chart and take a look at what's going on. The actual volume high, when there's a divergence here in the New York Stock Exchange, there's a problem. And it really becomes a problem when price moves below Stevie's red line, which is what took place yesterday. All right. And the actual high from a volume standpoint that formed inside of the New York Stock Exchange from a volume oscillator standpoint was right around February 21st. I think that's the exact date out there. It was February 21st to the 22nd. Sometimes my dates are off by a day right here. But I think it was the 21st out there. As I say, it doesn't really matter. Let's not split hairs. What we can see is we can see a series of lower highs out here with regard to the volume oscillator not confirming this. So that is problem number one, numero uno, out here inside of the New York Stock Exchange. Now, let's just say that my prognosis is correct. We're going to see a further bounce tomorrow, Monday, maybe Tuesday, Wednesday. What we'd really be watching for is the price moving back to Stevie's red line inside the New York Stock Exchange. That number is 11,547. If this really is the beginning of a retracement inside the market, price will not overtake that level. Ideally, we'd like to see that area get tested. Doesn't have to, but if the market were to continue to bounce, that would be a number that you would be paying attention to. Or I can at least say it's a number I'm going to pay attention to. That's if, in fact, we get up there. Will we get there? I don't know. There's another even larger problem inside of the New York Stock Exchange, and that is this. And this is where yesterday's data, yesterday's move down comes back into play. And this is a chart that I share from time to time when it's appropriate with newsletter subscribers out here. And this is where I make my own adjustments to the advanced decline data. And therefore, it's summation index, and that's why it's referred to as a ratio-adjusted summation index. I won't go into all the details, but it is proven to be really helpful in understanding what the market is doing. You'll see I've got some notations on here when price closes above a zero line. You know how I like my zero lines out here. What it offers us is the promise for price to move to higher ground out there. And when that adjusted ratio gets to the zero line and fails, signaled by the red arrows, and of course I've got a black arrow there where it never truly made it up, and then price gets below Stevie's red line, such as it did yesterday, that's when trouble really starts to brew out here. So this is a chart now that actually sets the course for a further decline inside of the New York Stock Exchange. The only thing that could possibly change that would be for the advanced decline data to get so good over the course of the next several out there, and then get back above zero, and then we would change our mini, or for price to get above Stevie's red line. Again, New York Stock Exchange is 11,548. Now, is this mean, because it's trading below there, that this is it? This is the beginning of a bear market. We've seen the highs, that's it. The answer is absolutely positively not, unequivocally not out here. Look, we are off. The market averages every year at least a 10% decline. If it's going to occur this year, really, if it's going to occur this year, we haven't had it for over a year. So if it's going to occur this year, it's not to sell in May, but it does have to do with the unfavorable seasonal cycle, which typically begins forming around the middle of May, hence yesterday. You see another nice bounce moves down into June, a buyable bottom, moves higher into August, and then voila, things just typically move lower into the October timeframe. So if there was ever an opportunity to get that kind of 10% correction. Well, now is when we could see that. From the highs is what I'm referring to out here. And the New York Stock Exchange does have one of Stevie's topping signal patterns out there, price moving higher, doing with less relative energy back in March. So we now need to open ourselves up to that. I'm certainly open to that out here. What I'd really like to see is more of a bounce for a bit more of a counter trend rally. But that's just perhaps being a bit selfish, because I'm not sitting on the short side of the fence right now. I'm looking for a better place and watching these other patterns out here to make sure that nothing gets violated that would switch us back to just simply all-out, full-bore bullish in the market. So that's the New York Stock Exchange. Those are the charts, really. When we started off with the 120-minute time frames, I think those are very important. Obviously, I believe that the spot volatility index is very important. But it really needs to move lower. It's going to be moving lower. It has to move lower. I know you might say, no, it doesn't have to. No, actually, it does have to. It's got to get back in line. It is overstretched. It should not have done what it did yesterday. By doing what it did yesterday, it really kind of threw things off for the bears. I know that may be hard for some of you guys to or gals to believe, but bears were better off without a day like yesterday. Now, anyways, let's not get too far. Let's not get too deep into the weeds out here. Let's just go take a look at some additional charts, and let's go change the subject matter, so to speak. Well, if we're going to change the subject matter, what should we change it to? That's the question out there. I, for one, would say let's go take a look at the Japanese yen. We got to go because if ever there was a move yesterday, yes, there was a move in the markets. And if you think there was money lost on being long the U.S. stock market or the Dow, let's say, and it being down 360 points, that's nothing. Pales in comparison to the money lost inside the currency market here, especially with regard to your friend and mine, the Japanese yen. Now, what we know about the Japanese yen was in its move lower, slid right through its levels of support, that being the two dashed lines on my screen out here. Today is a bit of a pause. Now, that pause was courtesy of why did that chart go away? Oh, courtesy of the 120-minute time frame chart. It just shows you how important that 2-hour chart is. It was courtesy of Stevie Wonder's Singing in the Key of G. Now, in this case here, we switched over to the futures contract. That way I've got active data for you. And you can see off of the low back here on May 10th, just doing your counts to the upside. This morning at 6 o'clock, you got a 7th wave move, a letter G out there. It's the reason that subscribers and I said, no, we're not going to dip our toe in the water on gold, because we ought to see gold pull back, which, by the way, it did pull back. So we'll go take a look at gold when we get back from this break. But if this yen resumes, takes out that 7th wave, it's adios to the upside for Goldilocks. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Maybe I'm reading something wrong out here. Natural gas. Okay. Sorry about that. Thank you. I'll get back. I'll go take a look at that probably during the next breakout here. So I'll go ahead and take a look at some charts for you on that. Okay. So Dow's up 23, S&P is up 5. Don't mean to carry on a private conversation that you think I've left you out of. It's certainly not my intent to do that. But we're taking a look at the yen. And then we switched over to the yen futures out there, and that said that, okay, gold was going to go ahead and pause. Now, what's interesting here is, so let's take a look at the gold contract. Let's look at the daily right now. And what I would anticipate is the following. I'd anticipate that gold's going to go ahead and pull back and probably test the top of its daily box. But let's look at the 4 time frames out here for the gold contract. And in fact, you know what? Let's go use Stevie's Etch-a-Sketch, right? Let's look at my synthetic contract because these profiles are going to actually be more solid with regard to numbers that are out here. So here's what you and I know. And we're going to start off with the 60-minute chart, left-hand side. Actually, from here, we'll just go right into the natural gas. How about that? So we've got the 60-minute chart, then the 2-hour chart, or 4-hour chart, I should say, 240 daily, and the weekly. Now, let's start with the weekly, actually. In the weekly, a key level of support for gold is going to be 1247.30. If gold is below 1247.30 come tomorrow, then it's still in a downtrend. In fact, it will have broken through a very important level of support, its TAS market profile, and says it still has further to go to the downside. That's what the weekly would be saying. The daily would say, well, not so fast. The daily would say price needs to get down below 1241. So watch 1241 and 1247 on any kind of pullback or some type of retracement out there. The 60-minute chart, now going back to the left-hand side of the chart, already shows that there is some potential problems inside of gold because it's testing the bottom, which is 1250.80. We're trading at 1250.80. Right, so we're right on support. Unfortunately, the structure of this box is pretty equilibrium, so I can't say that it's strong support. What I can share with you is if you close below 1250.80, that says lower price. And the 4-hour chart, 240-minute, you can see that the bottom of its box is 1252. And again, we're trading right now at 1251. So we're starting to see some real chinks in the armor to suggest that price might pull back to the top of that daily box, 1241. Watch 1241 like a hawk. If there's going to be a buying opportunity, go ahead and size this up with yen futures out there. It should be at about that 1241 level. So I hope that assists you with regard to that. If we take a look at silver, we do the same thing out here just to take a look and see what silver is actually doing on its retracement. Bad news bears with regard to the 60-minute time frames. We keep seeing new profiles for them. So it says real resistance at 1679. Price is trading below the 240 low of 1667. Price is going to come back and test 1652. That's the top of the daily box. If you close below 1652, that's a real bummer. It's a real bummer for silver, high-ho silver, that is. And then it would then say price will get down to about the 1618, 1630. When you close below that, then it's just simply curtains. I don't know where curtains are going to take us to, but we'll come back and take a look at that. So those are the numbers that you would want to go ahead and take a look at. So there was a request to go take a look at natural gas. So let's go do that out here. And where do we have the natural gas contract? There we go. That is the August contract. Is that correct out there? Let me look. Yeah. So let's go take a look at it. Give me 1 second here just to switch over. And the question was, do we have, please show me if you see cause for, I got it. Thank you. Is cause for an idea of energy, natural gas having bottom today since the top was April 5th or so. All right. So if you're looking for has natural gas bottom, that is the question out here. And we take a look at it. Let's look at the weekly and daily. Let's start from right to left out here. With regard to has it bottom, the daily needs to hold. So what took place yesterday, took place this morning, is the price level. And the area you're going to watch is 325. The actual low today is 325. So there is, in this daily box, you can see the structure, which formed yesterday or it formed on Monday. Looks like this, today's Thursday, looks like it formed on Tuesday, to be accurate. What we can see is the structure of this box is bullish, meaning the point of control at 331 is closer to the bottom of the box, 325. So if price can get above 331, what you ought to see is an eventual move up to the top of that area, 350 out here. Now at 343, that happens to be the top of the weekly area. So clearing all those would go a long way to then saying, okay, yeah, it's bottom. Having tested the bottom of the bottom of the daily box, that would say and give reason to say, okay, this in fact could be a bottom out here. The month or the weekly is not really providing us with a ton of information out here. Nothing to really hang your hat on. What you'd like to see is you'd probably like to see the price get above 330, 3.306, which happens to be the top of the 60-minute profile. But let's face it, we've seen some closes above it, and it really didn't do a whole lot. So I'll fall back on 331. That's your number. You need to see it close above that, and then that would signal that price would move higher. So I hope that assists you there. We also had a request if we could take a look at the Treasury bonds. So let's go take a look at them. I just have to figure out where. There we go. So we're looking at the 30-year T-bond futures right now. And as we look at the question was the 120-minute profile. Well, let's go. First, let me show you this, because this is what's more important. I can't say more important, but this is what's important. This is what's supremo importante. How do you like that for my Spanish? Probably have butchered it, but it was my best shot. The price of 154.17 is the level. The actual high we got to last night, I believe, was 154.13 out here. And that's the top of the weekly box. So what we know is price has found resistance out here. If these T-bond futures are going to continue to move higher, price will take that area out. So that's the area that I would be watching. I will go put the 120-minute time frame up for you right now. I'll just switch this from 240 to 120. It will go ahead and populate. That way I provide you with the information that you were looking for. And as we take a look at it, you're just focused on the 120-minute time frame. You can see the price is back above its most recent profile, so that is certainly bullish out here. Everything on the 120-minute chart looks bullish. That would change if you saw it close below 152.25 out here. But what you really want to be watching, even though everything is bullish, gets back to the weekly time frame. And so that weekly time frame number is really the one for you to watch if you're looking at being able to take this to the long side. If you're looking to short it, well, then in essence, that's the area that you shorted from. You have a tight rein, a tight stop, and then you just simply go from there. Now, here's the problem with regard to shorting it. The problem is that you have a rising price oscillator above zero. And I'm telling you, this suggests 158 is on the horizon. So just be careful shorting the 30-year Treasury. A better short right around 158. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So, last night after the workshop, did a little unwinding, cracked open a little bottle of vino, started cooking some dinner, sat down to watch the Ottawa Senators and the Pittsburgh Penguins hockey game. Turned it on, and before I knew it, it was 4-0. The game was over, in essence. Before I know the game went on to 5-1, but basically was over in just a short period of time. So, had to change it up. Now, had a request out here. You didn't even need to know that, did you? But I had a request out here from Danny in Atlanta, who I believe is a soybean farmer, and he wanted to take a look at the November bean futures contract. So we've got that up on our screen here. Basically, as we take a look at this, you can see all of the red bars out here. That just simply means that price is below every level of support for any time frame it is that I have up on my screen, 60, 240, daily, weekly out here. So basically, that does not bode well for you. However, if we do open up the weekly chart, it's possible that price has found support because we're back into the price point of about August of 2016. That level we saw tested and rejected, so to speak, back in April 2017. Of course, we can see that price found resistance right at the top of its weekly box, that being 990. So what I would say is that it doesn't look good from basically any perspective, but this could be a level that holds. If it doesn't hold here, then this thing takes a run on the reading all the way down into the 886 type area out here. And that is your November beans. Taking a look at the weekly charts out here. So in the last couple of minutes, what is it that we're going to be focused on, paying attention to? We're anticipating gold to continue to pull back out there. We're going to be watching the spot volatility index. We'll put it back up on our screen right now. And that is because should you see it close below right now, the number is 1389. So just kind of, adjust it up or down by a few pennies. If you get below that upper Bollinger Band, then you're going to see lower price. And what I can guarantee you, without guaranteeing you anything, is that you'll see the S&P continue to move higher. We may see the S&P continue to move higher, maybe even go ahead and form a Gartley sell pattern. That would be ideal if, in fact, it could do that. We know that we've got some levels that we're paying attention to. Those specific levels, we said at 2 o'clock, we're 4 minutes, less than 4 minutes. You've got the ES Mini trading above that level of resistance. So that says anticipate higher prices. Yeah, it's breaking right above, closing above resistance. So too is the NQ. So too right now is the Dow, which had been a weak link out here. The Russell, I've got a little bit of a delay, so I don't know if it is or it isn't. But this is saying anticipate the ES Mini is going to get up to 2381. Anticipate that the NQ is going to get not to 5659, but to 5689. And if it does that, it's going to be so close to the highs that it's going to go ahead and take them out, probably. And you're going to see another new all-time high. And after yesterday, you're going to say to yourself, how can that be? And the way that it can be, in fact, you want to watch, because right now, if the VIX were to fall below that, if we were to see a negative 10%, a minus 10% rate of change from yesterday, then today will be an initiation move, an initiation to higher prices. So where that VIX volatility, the spot VIX index trades to is really important from a number of different perspectives. Right now, it's only been about a 3% decline, but you know what? That can change in a heartbeat out there. Anything minus 10% or even less says today was an initiation move. So those are the numbers. Be careful while you're trading. And by being careful, we just simply mean use protection. Yeah, I'm referring to making sure that you use stops on both sides of the trade. Have one of those cancel other orders out there, and you will be just fine. So stay tuned, folks, because your favorite polar bear and mine, David White, is up next. He's trying to eat a bunch of bull meat out there, but they're not serving at his bar. I think they're just serving some weeds and things of that sort. Folks, have a great remember, it's Merengue Thursday. And I'll see you on Salsa Friday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.